the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a quick look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as usual, a quick recap of how we started. Well, Singapore shares started trading in the red today, tracking overnight losses in European markets. So if we look at the Straits Times Index, it opened 0.5% lower at 3,869 points, after some 25.2 million securities changed hands in the broader market. We do see the STI closing further in the red, down 0.63% at market close at 3,862 points. In terms of value turnover, that's 913 million Sing dollars. The gainers trailed losers 222 versus 281. Top advances for today, we've got here Spindex Industries, Plato Capital, and Ascend Bridge. And top decliners, we've got here GMHUSD, DBS, and Jardine Cycle and Carriage. Now, in terms of companies to watch, we do have for you Suntec Reit. Now, what is happening here is that the property tycoon Gordon Tang and his wife Celine, they have raised a mandatory conditional cash offer to acquire all units of the Reit. Now, elsewhere, from more on China's consumer prices stalling in 2024 on feeble demand, 2 minutes from the Federal Reserve's December meeting, we've got more international headlines in focus for today. But first things first, let's start off with the counters to watch on the SGX. Earlier, we talked about Suntec Reit, so let's bring you more details over here. Well, property tycoon Gordon Tang and his wife Celine, they've raised a mandatory conditional cash offer to acquire all units of Suntec Reit, and they've raised it to $1.19 a piece. Now, the offer was made solely to comply with the takeover code, and the duo intends to maintain the listing status of the Reit on the local bourse, the Singapore bourse. Now, units of Suntec Reit up 0.833% at the close. Now, aside from that, we're also tracking car dealer Tan Chong International, because Tan Chong International is expecting an unrealized loss of 29 million Hong Kong dollars, or around 5.1 million Sing dollars, on its investments designated at fair value through other comprehensive income for the year ended December. Now, the group yesterday attributed the loss to share price changes in its listed investments, which are marked to market. So if we look at shares of Tan Chong International, it ended the day flat, though, at 1 Hong Kong dollars and 4 cents. Well, in Asia, how did Asia fare today? Markets sort of struggled after a tepid lead from Wall Street. Investors, they are growing increasingly worried about the outlook for inflation and, of course, U.S. interest rates as Donald Trump's second presidency looms. Now, we've got a report saying that the president-elect was considering declaring a national economic emergency to provide legal cover to impose tariffs on all imported goods. That also added to the sense of uncertainty we're seeing on trading floors. Sentiment also clouded by data out of China, showing that Chinese consumer inflation remained almost non-existent despite that raft of stimulus measures we saw towards the end of the year last year. So looking ahead, Friday's U.S. employment numbers, the non-farm payrolls numbers, they're well in focus for trade. Markets for today in the U.S. in New York, they are close to mourn former U.S. President Jimmy Carter's death. Now, after fluctuating through the day overnight, in the U.S., the Dow and S&P ended slightly higher, but the Nasdaq dipped. So in early trade in Asia today, we saw Hong Kong edging up and Shanghai down on that Chinese inflation data. As at the market close, though, most Asian markets in the red. So Australia's ASX 200, for one thing, closed down 0.24%. Nikkei 225 in Japan closed down 0.87%. South Korea's Kospi closed up 0.03%, the outlier for the day. Hong Kong's Hang Seng closed down 0.2%. Shanghai Composite closed down 0.46% as well. So markets struggling there, so to speak. Now, speaking of the consumer prices out of China, let's take you through the details. So if we look at official data out today, China's consumer prices, they barely rose last year. Factory gate prices extended into a second straight year of declines as well. So if we go by data from the National Bureau of Statistics, the full-year consumer price index, or CPI, that rose 0.2%, which is in line with the previous year's pace, but it is well below the official target of around 3%. And that suggested that inflation missed annual targets for the 13th straight year. So in December alone, the CPI crept up 0.1% year-on-year. That's lower than the November's 0.2% increase and also the weakest pace since April. But that 0.1% year-on-year increase in CPI in December was in line with forecasts in a Reuters poll of economists. Now, the numbers were weighed by, of course, the persistently weak domestic demand. We're looking at a combination of job insecurity, that prolonged, protracted housing downturn, debt and tariff threats from the incoming Trump administration that has all hit demand, even though China and Beijing has ramped up stimulus. Well, further away in the U.S., we must take a look at the country's inflation outlook and also what's next in terms of interest rates. Of particular focus, the FOMC minutes out overnight. Now, speaking of which, Wall Street's biggest banks, they have pushed back the endgame, the expected endgame for the Federal Reserve's ongoing efforts to shrink the size of its balance sheet. And that is per the minutes from the Fed's most recent policy meeting, the December meeting, that is. So to this end, banks actually told the central bank ahead of the December meeting that they saw this process ending in June of this year. So, recounting a briefing by a New York Fed official responsible for implementing monetary policy, the minutes actually noted that the timeline is a little later than what they had told the Fed ahead of the November policy meeting. So just to bring you some details of what went on at the December meeting, if you recall, the meeting held on the 17th to 18th of December saw officials trimming the interest rate target range by 25 basis points to between 4.25% and 5%. They also cut back on expectations of future rate cuts, and they also raised the estimated path for inflation. But at the meeting, the Fed did not announce anything new on its balance sheet drawdown. It did, though, make a technical change in the rate paid on its reverse repo facility to help induce money market funds and others to move cash off the Fed's books and also into private markets. So that's what we are looking at. And finally, let's take a look at Apple and its voice assistant, Siri. How many times have you, I'm not sure if you share this experience as well, have you accidentally activated Siri by saying something similar like hi Siri, hey Siri, or etc.? And I'm bringing this up because Apple actually clarified yesterday that it has never sold the data collected by Siri or used it to create marketing profiles. And the remarks came just days after settling a case in which it faced such accusations. So if you recall, the iPhone maker last week paid $95 million to settle a class action lawsuit. And in that lawsuit, here's where it gets more interesting. Plaintiffs alleged that Apple routinely recorded their private conversations after they activated Siri unintentionally, and that the firm disclosed these conversations to third parties such as advertisers, which means when the voice assistants react when we use words like hey Siri, hi Siri, and etc. Now, in response, Apple actually denied those claims that did not admit to them in its settlement last week, in which tens of millions of Apple customers may receive up to $20 per Siri-enabled device, be it your iPhones or Apple Watches. But to this end, Apple yesterday said that it has never used Siri data to build marketing profiles, never made it available for advertising, and never sold it to anyone for any purpose. And what's interesting is that Apple actually issued the statement after social media users and commentators, they interpreted the settlement as confirmation that the allegations were indeed true. So, in its statement, Apple actually said that certain features require real-time input from Apple servers and that it is only in such cases that Siri uses as little data as possible to deliver an accurate result. Now, it said that Apple does not retain audio recordings of Siri interactions unless users explicitly opt in to help improve Siri. And even then, the recordings are used solely for that purpose. And of course, Apple added that it'll continue developing technologies to make Siri even more private. A nugget, a piece of news for you as well. We also have a similar lawsuit on behalf of Google's voice assistant pending in the San Jose, California federal court. And the plaintiffs in that scenario, they are also represented by the same law firms as in the Apple case. So, what do you think about that? And do you share a similar experience of having your Siri activated unintentionally as well? We'd love to hear your thoughts. Let us know at 8855-0893. WhatsApp us 8855-0893. We'll love to hear from you. And that's all that I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.